Hey, what's up, YouTube? Today I'll be showing you my $26,500 Robinhood portfolio and my positions for next week. I'm a beginner trader and building a brand new $50,000 portfolio on Robinhood and Vivo. As you can see, I have just over $3,000 worth of options in stocks and about $23,500 worth of cash, and I'll tell you the reason why I'm holding so much cash. So without further ado, let's dive into it. So we'll go to my main account. I'll just show you my overall account. So for the past year, as you can see, I just started this account this year and I deposited $25,133 overall. As you can see, on March 25th, my account was up almost $23,000. I mean, sorry, $3,000, and now it's back down to 26,500. Overall, I'm still up $1,500, and that is for the past basically 3 months, right? Um, so over here, you can see my positions. Um, a couple of options I bought today. We'll go take a look at the United Airline option that I sold today. Basically, I sold this $18 put option for May 29th for $85, and I'm currently up $1 on it. And basically, if we go take a look at the options chain, and we go to put and go to sell. So you can see right here, I'm currently holding one $18 option, and the price is now $84. So I'm currently up $1 on it. Let's go take a look at the other options here. Now this is the second option. I bought this option. This is a General Motors $19.50 put option for the same expiry date, May 29th. I bought this option for $55 and I'm currently down 40% on this. I have a good feeling on this because I've made money on General Motors in the past, and I'm not too worried about it. It wasn't too expensive. And if you go take a look at the overall uh, 3-month chart, it was down to like $14 at one point. So if it goes down below 1950 by May 29th, I'll make some money. If not, my option will expire worthless and my $55 will go to waste, which is not a big deal. So let's go take a look at the Delta airline option that I closed today. So I had sold a $19 put option a couple weeks ago, and today I closed that option. So if you go to history, and as you can see, on May 6th, I sold a two $19 put options for a total of $104. And then today, I bought it back for $18 and closed the option. And then I sold another one, but I bought it back because I wanted to buy some Delta Airlines shares. But unfortunately, the share price was above $19 and I wanted to buy it under $19. So I did not get a chance to buy any Delta Airline stocks. And the reason for that was so I could sell some covered calls on that. So I'm hoping on Monday when the markets are open, I can buy some Delta Airline stocks so I can sell some covered options, and I'll be holding those long term and just making money selling uh, premiums. So that is for your Delta Airlines. Now we'll go take a look at some of the stocks that I'm holding, or actually, I'll go take a look at the other options that I bought recently. So we'll go take a look at Intel option. I bought this on April 21st. It's been a while. I paid 32 cents for each. I bought two of them, $75 call, and I'm currently down almost 90%. Most likely it'll expire worthless, but I've got some time. I've got over a month, so we'll see how that goes. I've got plenty of time on it. I'm not too worried about it. Um, let's take a look at the other options. The markets have been really, really choppy and really crazy. Um, a lot of these options I'm currently down on because the markets have been going up, but I'm really, really bullish. Bearish overall. So I'm hoping the markets are going to go down, which I think we're starting to see. And as you can see over here, JCPenney also just filed for bankruptcy today. So we're seeing some effects of this virus, and we're going to continue to see those over the next few months. And by then, hopefully by then, these will come back to life, and I'll be able to close them for a profit. So the next option I also bought is a TLT ETF, Treasury bond. It's a $200 call option. I bought two of these for $55 each. Um, these are for 7/17 expiry, so I've got over 2 months. Currently, I'm down 16%, $18 on this one as well. But as you can see, we've got plenty of time, so we'll see how it goes. This is a call option, so this is not a put option. So when the stock markets are going down, this is the reverse of it. The treasury bond ETFs usually go up. So that's why I bought a call $200 call option for the TLT. I have a few UUP call options. Let's see. So my average cost per share is 19 cents, which is $19 per contract. And I'm currently holding five of these contracts uh, for 918. So we've got almost 4 months on this. Currently, we're down 42%, almost $40. But hopefully, this is a $30 call option, and currently the share is trading at $27.17. So we'll see how that goes. Like I said, the markets have been really, really choppy and really, really crazy. So we're down on a lot of these options, but I've made money on most of these options. So even with all of these down so much, I'm still up for the past 3 months, like $1,500. So I'm still in the positive. I just started trading, and so far it's been going good. But I've been trying different strategies. Before I was just buying naked options. But now I'm trying to sell as I'm learning more, trying to sell more call options and also building my long-term portfolio, which we'll take a look at. Uh, so the next one I have is a SPY $200 put option. This is a very, very long-term option expiring next year. I know it's very, very far out the money, $200 put option, and I paid a lot for this. I paid almost $1,100 for this, and we're currently down 38%, $410 on this. But like I said, I'm bearish overall, so I'm hoping this SPY will start dropping pretty soon, and it's really overvalued right now. Looking at all of the stuff that's been going on, and the virus cases starting to go up as the economy is reopening. There is lots of bad news. I know a lot of it is factored into the market, but the value for me it seems pretty high, and I'm just bearish overall. So that's why I bought this option, and it's a very long-term option, so I'm not too worried about any of the theta or any of the Greeks. So we'll see how it goes. It goes up and down and up and down. So I could have closed it for a break even at one point, but I didn't because this is all from the profits, and even with so much down, I'm still up overall. So I'm just gonna hold on to it and see how things go. We've got plenty of time on this. So let's go back, take a look at my last Microsoft option, which is also a long-term option expiring 2021. Uh, and as you can see, I'm down almost 90% on this option as well. I paid $195. The reason why it was so expensive was because I bought it at the peak of the volatility when the options premium was really, really high. And now it's just basically the balloon has burst, right? So now the option is down $173, and we've got plenty of time. If Microsoft starts dropping, maybe this will come back to life, but I don't have high hopes for this one. But we'll see how this one goes as well. Um, let's go back to my portfolio, and we scroll down here. So as you can see, I've been holding some long-term shares and trying to build my long-term portfolio. The reason why I'm still holding so much cash is because when the market started to crash, that's the time I had started trading, and I wasn't really sure what was going on. I had never invested in the stock market, and I was just taking things slow and not jump up like buy too much of it, which I did for the Boeing one, and I think I made a mistake, and that's why I'm currently down so much on it, even though I'm only holding 6 shares. But the first few shares that I bought were at a very bad price, right? So I bought the first few shares, I believe, at $272, and that was just not a good price, right? So thank God I didn't buy more of it, thinking that was a great price that it fell down from $350 to 272 because now it's trading at $120 and it was down to as low as uh, I believe $80, which I or somewhere around $80. But as you can see, I've been averaging down, brought my average cost down to $165 now from 272 that I bought the first few. So I got lucky on that one. I'll tell you that. I didn't buy more because I was trying to average down, and that's why I'm still holding so much cash because I'm bearish overall, and I'm thinking that the markets will decline, and I'll be able to get some really good deals on really good high quality blue chip stocks. Like I'll give you some examples, right? Like Disney, I bought 5 shares at a very good price. So my average price for Disney was $82. Currently, it's trading at $180. And if it drops below, I'll be buying more because I know overall Disney is a very long-term, very good company, and they just started their video subscription as well. So I know Disney is not going anywhere. It's probably not going bankrupt anytime soon. So Disney is, for me, is a very good investment. The next one I have is Uber. I have 10 shares of Uber, and my average price for Uber was $17, and I'm currently holding 10 shares. And total return is I'm up 90% on these stocks. Um, Total return of $153 on 10 Uber shares. The next one is Microsoft. Now I just have 2 shares of Microsoft, but I made decent profit on this because my average cost was very low, $146, and I think I bought it right when the market was crashing. So um, So as you can see over here, it doesn't tell me any of my history of the stocks I purchased, but we can see my average cost is $146, and I'm currently up 25% to $72 on two of these stocks. I'm gonna buy more of Microsoft, but I'm just waiting for it to drop down because it's for me it's very overvalued right now, or maybe not overvalued because we but I'm just waiting to for it to go down so I can more of Microsoft. So this was also a bad entry for me on General Electrics because I bought it at the same time I was buying Boeing. And you can see I bought 20 of these for the average price of almost $11. Currently, we are down 50%, $108.80. I'm not too worried about it because I'm going to be holding this long term. So we'll see how it goes. I'm not buying any more of the General Electrics, and I will not be buying any more of it, even if it goes down further. So that is it for General Electrics for me. Now the next one we have is Live Nation. I bought three of these shares for the average price of 31.34. Currently we are up $26 on this one as well, $25 of total profit on three shares. Now the next one I have is AT&T, and I bought three of these shares, and I believe I bought these recently. So yeah, May 14th, I bought two of these at an average cost of 28.04, and then I bought one on May 1st for 29.90, bringing my average cost for the three shares to 28.66. Currently we're down a little bit, but AT&T is a very good dividend stocks, and I'm hoping to buy more if it drops below the average price. So maybe I'll sell some put options, but for put options, you're not they don't pay a lot of premium, and I don't want to lock up my collateral for that long for not too much of a premium, right? So if I go for something like 80 percent chance, 79, 80% chance, you can see it's only $27 for how much collateral? Let's see, for $2,700 collateral. So that's not enough risk to reward for me. So that's why I'm not looking to sell any put options, but I might just buy 100 shares and sell some call options for AT&T and just collect premium that way. Uh, I think that is it for me. The GoPro last one, I only have one share because that was a free share when I opened my Robinhood account. I also have a Webull account which I have $25,000 in that account, and that is for a different purpose. I'll explain that in the next video. So if you guys are interested in me showing you my Webull portfolio, please drop a like and comment below to show my Webull account portfolio, and I'll make sure to make that video next for you guys. I hope you liked this video. I hope you found it helpful. If you did, please drop a like and subscribe to my channel, and please make sure to share this video with your friends. Thank you all, and have a good day.